Welcome back, traders and investors. We have Jeff Pierce on the line here, founder of Zentrader. Jeff, how you doing today?
Hey, good morning, guys. Thanks for having me on.
So tell us about Zentrader.
Well, and it's just so your audience knows, it's zentrader.ca. It's a Canadian domain, so if they're Googling Zentrader, they're going to get some other guy's website. But yeah, zentrader.ca is an area. There's a couple, or myself and a few other people who contribute on a number of different topics. Me, I generally talk about market timing, sector analysis, and momentum stocks. We've got an options guy, forex guy, a market cycles guy as well. So you kind of get a little bit of everything there.
What do you think Janet Yellen's comment? I want to call her Annie Jeanette because far he's been calling her Annie Jeanette for 15 minutes. But what do you think of how Janet Yellen did there yesterday, driving us up to new highs here, there, Jeff?
Well, I generally don't really pay attention to the news, and I know that that can be shocking to a lot of traders. But I like to watch the reaction to the news. So I don't even know what the comment was. At this point, the Fed. I mean, we're in such an unnatural market that sometimes it can be difficult to trade. I'm skeptical personally of where the markets are at in relation to new highs. But so I don't really have a comment on that. But all I can say is that to tread lightly if you are very invested on the long side, because I can't believe the move when I look at the technicals behind the markets in terms of I'm just not seeing a lot of new leadership. I'm seeing a lot of stocks that have negative divergence on some of the longer term trends, and it doesn't feel like a healthy market to me.
Okay, so your market timing. So what? Talk a little bit about that. What your time frames are, and what components go into your market timing.
Well, I have two main components for my market timing, and most of it is proprietary. I can share kind of like where we're at right now. I believe on February 5th, the markets have entered a major the major trend turned down. That hasn't happened in a couple years. And yeah, we're at new highs, but I'm seeing a lot of weakness behind the scenes. And so the time frame is more of it's just a daily to weekly. But then there's the other component is I kind of gauge the health of the markets by, are we seeing new leadership in terms of stocks breaking out of like an earnings catalyst or some kind of news catalyst, stocks breaking out to new highs. And it seems like the stocks that are doing the best from a momentum standpoint are recent IPOs and Chinese stocks. And these aren't the kinds of stocks that I feel are safe. And I think they're also kind of, it's like a bubble kind of mentality. So it's a dangerous market in my opinion.
What about the energy stocks? Because a lot of them have actually been breaking out to new highs. We got Chevron, ConocoPhillips, a lot of those. So some leadership over there in the energy is can that help this market?
Well, typically energy, and you're correct. I am seeing some leadership in oil and gas stocks, oil and gas pipeline stocks. Of course, pharmaceuticals have been good. Defensive stocks have been good. These are all typically defensive sectors in terms, they're typically stocks that they don't lead bull markets. They do well when the markets are kind of shaky. And so you're correct that there is some leadership there, but I just get weary when I see stocks like that starting to do well. It tells me that fund managers are starting to put their money into more traditional safe stocks, maybe because they're anticipating some stormy weather down the road.
I mean, we've been on such an incredible, basically a 5-year run here ever since the financial crisis. Every small investor that was throwing the towel when the S&P bottomed back in March at 666 has been crying all the way up. It's kind of like one of the most hated rallies here all the way up. But now you get this whole, like, I think what you're saying too, like the bubble. I can feel it too. Like you get this like herd mentality where everybody just scrambles into this big mover and then scrambles over into this big mover, and they're really moving into, which is, that can be scary when the herd is, this strong. And, and that's really, obviously it's been driven by the Fed induced herd. But do you think this bubble does eventually burst here? And when do you think this happens?
Well, it's kind of like all right, I live in Vancouver, and the real estate market here it has been in a bubble for a long time, and everyone is pretty much is like, oh, just buy real estate, it's going to go forever. And of course, we all know nothing lasts forever. And you're absolutely right. For the last 5 years, the markets, I've been buying almost every single dip, and it seems like back in February, as I alluded to earlier, something changed. The stocks that stopped responding to the certain setups, kind of like that I look for in momentum stocks, and I feel like something has broken. But bull markets, and historically, this has been one of the longest, if not the longest, without a major correction. I lost my train of thought here. So I've been buying every dip, but as I said, in February and March, there seemed to be a lack of trading opportunities. In March and April, I personally, even though we're in a major trend that, in my opinion, that's down right now, we are in a bit of a dual market. And so the NASDAQ is still down. The Dow is at new highs. And so me personally, I've been short the indexes while taking select long opportunities to kind of hedge.
Okay.
I'm not comfortable being full long right now because I do feel that, like I said, we are it's getting long in the tooth, and I'm not a perma bear. As I said, I've been buying every dip almost for the last 3 years, but at the same time, there comes a point when everyone's on one side of the boat that you do have to be a little bit of a contrarian.
Isn't that the overall problem here, though? Like why the market continues to rally? Because every time you got the buy the dippers coming in, they're rewarded for that action. And people have just learned that if I buy the dips, I'm going to make money. And that's been over the course, like you said, almost of the last 5 years. Every time you bought the dip, it's been the right call. And now it's just basically everybody's got that. And especially if somebody started trading in the last 3 or 4 years, they've just learned to do that. They haven't really had to trade. If you used to start trading in the last 5 years, I haven't had to trade in a bear market here. So it's kind of like the no fear market here. What's going to be what's going to be, the reason that fear is going to come back in here and the buy the dippers aren't going to be rewarded? That's just,
Well, I don't exactly. I mean, I wish I knew. I mean, that's like the $50 million question.
Right.
But bad behavior can only be rewarded for so long, and the reason I personally believe that the markets have kind of been doing what they're doing is that we are in an unnatural market because the Fed and all their QE and pumping money, they're just they're refusing to let the markets go down for whatever reason. I mean, I'm not gonna stay bearish forever if the markets keep going up. Like my timing signal will tell me, okay, now, and we've kind of weathered through these last couple months where things have been kind of, like I said, mixed in terms of the long-term trend for the Dow flipped back up last, I think it was earlier in the month. But as I said, we're in a dual market right now where the NASDAQ, in my opinion, because it hasn't made new highs, tops take time to form. That was a train of thought that I had lost earlier. No markets go straight down, and we've kind of just gotten back to previous highs and a little bit beyond in the Dow. But as I said, bad behavior can only be rewarded for so long, and people who've gotten in the last 5 years have done well. But you need to be in a market. I've been trading since late '98, and I've seen the greatest of bull markets and the financial collapse in 2006. So give those traders who just came in 5 years ago another 5 years, and I'm sure at some point they're gonna see a pretty nasty correction in the market. That always happens.
What about Apple? Are you an Apple trader here? It's kind of holding in there after the 7-for-1 split. If you look at it here, a couple 3 days of pretty tight ranges here. Really, over the last three trading sessions, Apple's held in a buck 40 range here. Any predictions for Apple?
Okay, Apple's an interesting stock because it's so widely followed. I personally generally don't trade stocks that are so widely followed because they're just, like the Netflixes, the Teslas, the Apples. They got. It's kind of like at a blackjack table where you have like bad, if you've got like bad players in there, it affects the whole game. Well, I think a lot of new traders and amateur traders like to trade stocks like this, and so it really, in my opinion, affects the stock charts. But back in April, July of 2012, I personally felt that Apple was at a top and it was going to have a pretty significant correction. And I got a lot of haters who refused to believe that, and it did just that. Now, we've basically rallied back into resistance. I've got resistance on Apple right around between 96.06 and 172, which was the top. I don't like this for a long trade. If you came to me and said, would you buy Apple here, I would say absolutely not, because we've basically rallied right into resistance. I would personally wait for it to break out on some kind of new news announcement, product announcement, maybe blowout earnings, and then maybe try to buy the pullback to the previous high. I don't personally like buying into resistance because it could form a long-term major top and then pull back more. It's kind of like what we're seeing in crude. Crude's kind of has a similar chart pattern as it's kind of rallying right back into resistance. I know it's the flavor of the day right now, but it's not a great chart from the long standpoint because both of them are nearing resistance. So I would be, until it busts through that and it's got blue skies ahead, I would be kind of leery of both charts.
Okay, we've had Jeff Pierce on here, founder of Zentrader, talking a little about market timing, his overall opinions on the markets. Jeff, thanks for coming on. We hope to have you on again.
Hey, thanks for having me on, and it was great talking with you guys. Have a great day.
Okay.
Thanks, Jeff.